Ron Siegel Radio, your home and mortgage connection.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
And hello again. Welcome to Ron Siegel Radio. This is the show with no real boundaries as we discuss current events, financial markets, politics, sports, even poking fun at the rest of the media. This is the show that connects the dots of confusion delivered by conflicting media reports. We connect the dots so you know the actions you can take, how your family or business can benefit in current events. Most of all, thank you for joining me. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day. We have a very focused show. We only chat about items that affect the roof over your head, your bank account, and anything I feel would benefit you. And let me remind you, if you ever have any home or finance-related questions, I am the consumer advocate looking out for you. And you can reach out to me directly, 800-306-1990, 800-306-1990, or ronsiegelradio.com. Just remember, that's the number you call anytime for assistance. When you call that number, it comes directly to me first. There are operators standing by.
Quiet, numbskulls, I'm broadcasting.
While I do have a great team when it comes to directing a financing plan or plan to save you money, I personally work with you. Even if you don't have any needs today, save this number in your phone for future reference. 800-306-1990, 800-306-1990. And we got a lot to celebrate today. I'm looking at these celebrations. Actually, Josh tells me the celebrations in the morning. And some of them I don't even know what they are. But, you know, I guess, Josh, did we do one National Adopt a Shelter Pet Day? No, you know, something, it's a good thing to adopt a shelter pet. Nothing wrong with that. There's some pretty cool ones out there. Today, though, a lot of it's all got to do with consumption. Yeah, National Bubble Tea Day is today. Now, I didn't even know what bubble tea is, so you got to look at it. Boba straws, and it's a bubble tea. And the best of bubble tea has to offer, from creamy milk tea to refreshing green tea to fruity slushies, all customized with different toppings, sugar level, and ice level. 1980s, the Taiwanese developed a beverage combining the freshness of natural tea, the wholesome creaminess of milk, and the fun of delicious bubbles. Okay, so we'll celebrate that one. Having beaten anorexia, though, I'm going to go with the National Oatmeal Cookie Day. You can't go wrong on that one. So we do enjoy our oatmeal cookies. We put a little raisin, maybe a chocolate chip in there. Now, I did mention the idea that it's raisins, so I should say that today's National Raisin Day. What a waste. I mean, think about that. All those raisins, they could be a good glass of wine. I know. Before I start getting all the messages, it's a different kind of grape. But, you know, we still like the wine. And today, Josh, we got to do this one. National Military Brats Day. So, yes, we do love our military men and women. Today's National Military Brats Day. And I'm just about finished with our VA home loan guide. So if you want a copy of that, send us an email, send us a text message, send us a smoke signal, any of the above, DM, what do they call it? DMs and IMs, and I don't, is IMs even available anymore? I guess I'm dating myself. That's I think did they get rid of IMs with AOL? That used to be the whole thing with that one. But send us any kind of message you want. We get them all. If you want a copy of our VA home loan guide book. We also, if you remember, earlier in the month, we did a whole series of workshops on the VA home loan. And for those of you that know, and I guess we could put there, if you know, you know, it is PCS state time right now, PCS season. So our military men and women, they know what PCSing is. So it is that time of year. Did I catch all of our celebrations today? I think I got them all. Let's see. Is there anything that Bugs Bunny Day? Josh, we didn't do Bugs Bunny Day. Okay, I guess you can't do them all. Let's take a look and see what the markets are doing today. Do we want to? Whoa, look at those markets. Dow Jones Industrial Average. That one is up 742 points. Yeah. We like that one. The NASDAQ is up 36. The S&P 500 is up 36. Oil down $2.69 a barrel. That's another good one. We like that one, oil being there. Now, yeah, we got to look at it because we haven't done it in a little while. We're going to look and see what are gas prices doing. Now, just because we can fantasize, we'll look at gas prices around the country. $4.30 is the average cost of a gallon of gasoline around the country. $4.30. Here in California, we are at $6.01 a gallon. Ow! Yeah, $6.01 a gallon for gasoline here in the formerly Golden State. Josh, we have about $5 right there. $5 a gallon over there in Nevada. And the cheapest gas in the land is $3.89 a gallon. Wait a second. No, it's not. It's $3.70 a gallon in Oklahoma, $3.71. So $3.71 in Oklahoma, $6.01 in California. Is that about $2.30 a gallon cheaper? Thanks, Gavin. And he wants to be your next president of the United States. Would that be a problem?
I got a bad feeling about this.
He could do to the United States what he's done to California. Oh, no. Ow! Yeah, that would be painful. Let's see what else is going on in the world. We got the Federal Reserve met yesterday. So Jerome Powell just can't get the guy to go away. And I know my friend Hammer, he likes this guy, but Powell, he's just the worst. There's nothing else I can say about him. He's done nothing. Yeah, I know nothing. Surprise. Josh, we need that sound bite. Get two of them we need. We need Sergeant Schultz saying, I know nothing, which that goes good for Jerome Powell.
Such an idiot.
Yeah, he is an idiot. So we need Sergeant Schultz and we need Jeopardy. We need those two sound bites. But Sergeant Schultz, just like Jerome Powell, he knows nothing. So he says he likes being the Federal Reserve being traditional. Yet he says that he's going to stay on, even though his term as Fed governor expires. I'm sorry, his term as Fed chair expires May 15th. His term as governor expires January 2028. Historically, every Fed chair has left after their chairmanship expires, with the exception of one or two where the president asked them to stay. The president did not ask Jerome Powell to stay. And other than my friend Hammer, I don't know anybody that wants Jerome Powell to stay. I'm not sure his wife even wants him to stay. But he's not going anywhere. That's what he said. He wants to stay and muddy up the waters for the next Fed chair who's coming in.
I got a bad feeling about this.
Yeah, I got a bad feeling about it. Jerome won't go anywhere. You are listening to Ron Siegel Radio, discussing your real estate, current events, and the financial markets. When we come back, spring housing market 2026, buyer advantages. We're going to talk about those. Stay or sell, how to make the right call as you age. Is late May the best time to list your house? And most condo owners are underinsured. Here's the math that proves it. We'll talk about all that and more. Reach me anytime. Off-air number 800-306-1990. 800-306-1990 or RonSiegelRadio.com. Facebook.com/Ron Siegel Radio. And if you missed any part of our broadcast, Ron Siegel 1 on YouTube. Ron Siegel, the numeral 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio. Your home and mortgage connection.
Are you a veteran, own a home, and need money? The Siegel Lending Team is here to help veterans refinance and get the money they need. The VA 100 lets you borrow up to 100% of your home's value, refinance your mortgages, consolidate credit cards, and lower your payments by an average of $700 a month. And the Siegel Lending Team knows that character means more than a credit score. Call 800-306-1990. That's 800-306-1990. Rate subject to change without notice. Licensed by the California Department of Corporations, NMLS 21037, and DRE number 018694452. You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's...
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. The Mortgage Minute today being brought to you by rsrlinks.com/mobile app, rsrlinks.com/mobile app, and every day at this time, OBMMI. They provide the most comprehensive, accurate, timely, and interactive analysis of pricing ever conducted in the mortgage industry. Calculated from actual locked rates with consumers across 35% of all mortgage transactions nationwide. They do not tell us points paid, points received, or the APR. They tell us the number you put in your mortgage calculator to determine your principal and interest payment. Don't have a mortgage calculator? Shame on you. We have them available for you for free. rsrlinks.com/calculators, rsrlinks.com/calculators. What did rates do yesterday? They were almost all up. Conventional 30-year fix, 6.348, that was up. Jumbo 30-year fix, 6.474, that was up. FHA 30-year fix, 6.161, that was up. VA 30-year fix, 5.924, that was up. And the USDA 30-year fixed, 5.984, that was down. The only one that was down. Okay, so if you want our thoughts about the market each and every business day morning, we put out our thoughts, rsrlinks.com/HBOD, rsrlinks.com/HBOD. That's the Ron Siegel Radio community, and you can get in there anytime you like. Now, let's see what rates, what's the market doing today? That's the question. S&P 500 is up 40 right now. The 10-year Treasury is down 4 basis points. We like that. No, it's Yahoo's. We like it. We like it. Yeah. Stick with that one. We like the 10-year Treasury going down. We like the mortgage bond going up. It is up 19 basis points, 100.57. We also might call that par 57. So that bond is going up, bond up, rates down. But the question you come here for is, why is it happening? Okay, so we've got the bonds moving. We got the oil prices down. That helps bonds after a big rise yesterday. The Fed concluded their 2-day meeting yesterday, which was Powell's last as the Fed chair. Yeah, we like that one. But not his last as a Fed governor. The Fed left rates unchanged as expected, but there were 4 dissenters, including Miran, Hammock, Kashkari, and Logan. Miran wanted to cut 25 basis points, while the others disapproved of the easing bias language within the statement. Clearly, there is a lot of dissension among Fed members. It's not going to get any better with Powell staying. He did drop a bombshell. He said he's going to stay on as Fed governor until he feels the time is right to leave. Nothing that noting that he will not leave until the investigation into the Fed is truly over. Jerome, the time is right.
Such an idiot.
Yes, he is. This is unprecedented, as the last time someone stayed on the Fed after their term as chair ended was back in 1948. When Mariner Eccles remained, but only after he was asked to stay by President Truman. You'd have to go back to 1916 to see another example of this with Charles Hamlin, who was the first Fed chair. Powell staying on at the Fed will make Warsh's job likely much harder, as the previous chair in the room will likely be in opposition to what he wants to accomplish. Initial jobless claims, which measures individuals filing unemployment benefits for the very first time, fell 26,000 to 189,000. This is a very low number, and one that many Fed members point to as why We are in a low fire environment, but they missed the mark on how the world has given rise to the gig economy. On average, across the U.S., weekly employment benefits only pay $400. That means over the course of the year, people are earning less than $21,000. That's likely not enough to make ends meet, so people are forced to do things like drive Uber. Uber drivers make an average of $45,000 to $50,000 per year if they are full-time, which is more than double unemployment benefits. Additionally, many are doing multiple services like Lyft, DoorDash, Instacart, etc., to fill their idle time, so the annual earnings may be understated. Bottom line, companies out there are still firing people, but many people are not captured in initial claims because they're entering the gig economy and are not able to collect benefits. Continuing claims, those continuing to receive benefits after their initial claim, fell 23,000 to 1.8 million. We did get the PCE, the Fed's favorite measure of inflation. PCE showed that headline all-in inflation rose 0.7% in March, which was a very high number, but in line with the market estimates. Of course, the majority of the rise was due to higher oil prices. Year over year, headline PCE rose from 2.8% to 3.5%. Not good, due to the high monthly figure and 0% replacement from last year. Core reading, which is the Fed's main focus, strips out food and energy prices, rose 0.3%, also as expected. Year over year, PCE core rose from 3% to 3.2%, partly due to a 0.1% low replacement from last year. Shelter was pretty well behaved and fell to 3% year over year, but is still overstating inflation. The markets took this report in stride, likely due to oil dropping a bit today, possibly because the new chair Warsh said he will pay less attention to this report and more to trimmed mean inflation figures that remove one-time price shocks. Also within the report was incomes and spending. Incomes rose 0.6%, which was twice the estimate. People are making more money. Spending was strong at 0.9%, but the rise in spending was due to higher gasoline and energy prices. About 0.4 or 40% of the rise was due to higher oil prices. Real spending, which removes inflation, rose only 0.2%. Even though income rose 0.6%, spending was still higher, which means the savings rate fell from 3.9% to 3.6%. First reading on Q1 GDP came in at 2%, weaker than the 2.3% expected. 1.5% of the rise can be attributed to AI and data centers, which shows how weak the rest of the economy may be. That is the Mortgage Minutes, brought to you by rsrlinks.com/mobile app, rsrlinks.com/mobile app. So let's do Mortgage 101. Mortgage 101 brought to you by rsrlinks.com/keysteps, rsrlinks.com/keysteps. If you've been waiting for a sign to stop renting, stop circling the same neighborhoods on your phone, and actually go buy a house, I have one for you. And it did not come from me. It came from the chief economist at Freddie Mac. I am Ron Siegel, certified liability advisor, helping families build wealth through strategic debt management. Thanks for spending part of your day with me. Here's the headline. Sam Cotter, who is the chief economist at Freddie Mac, said this out loud, quote, "Rates currently stand at their lowest level in the last 3 spring home buying seasons," unquote. Let me say that one more time because I think a lot of folks missed it the first time. The last 3 spring home buying seasons, we are talking about right now, today, this spring, being a better window than last spring and the spring before that. That's not a marketing line from a mortgage company. That is the chief economist at the largest backer of home loans in the country, pointing at the calendar and telling you what time it is. So what does this mean for you? It means the people who waited for rates to come down actually got their wish. The problem is, most of them did not notice because they are still looking at the same headlines from a year ago and assuming nothing changed. The market changed. They did not. Let me tell you what I'm seeing on my side of the desk. I had a couple come in recently. Renting for almost 5 years. Every spring, same conversation. We're going to wait until rates come back down. Every spring, the rent went up. Every spring, the home they wanted got more expensive. They finally sat down with me. We mapped out their full picture, and within a few weeks, they were under contract. Their payment is not a fantasy number from 2021, but it is a real payment in a real house they actually own. And every month from here forward, a piece of that payment is building their wealth instead of their landlords. Here's the part nobody on the radio talks about. Buying a home is not about chasing the lowest rate. It never has been. The rate matters. Of course it matters. But the rate is one number on one loan on one day. What actually changes your life is the strategy underneath it. That is the difference between eligibility and suitability. Eligibility is what most lenders check. Can you qualify for the loan? Yes or no? Boom, done. Next applicant. Suitability is a different question. Suitability asks, is this loan actually right for this family, in this house, with this down payment, with this savings account, with these life plans? That is the work a certified liability advisor does. That is the work I do. And it is the reason my clients sleep at night, because here's the trap of a moment like this. When rates dip, everybody rushes the door. Multiple offers come back. Sellers get bold again, and buyers who are not prepared get steamrolled by buyers who are. You do not want to be the family that finally found the right house and lost it because your pre-approval letter was weaker than the offer next to yours. That's exactly why the certified buyer program exists. A certified buyer is not pre-qualified. A certified buyer is not just pre-approved. A certified buyer has been fully underwritten up front before you ever write an offer. Income reviewed, assets reviewed, credit reviewed. File is essentially ready to close pending the property. When you walk into a multiple offer situation as a certified buyer, you simply show them the app on your wallet, on your Apple wallet, your Google wallet. You are competing on the same level as a cash offer, and in many cases, your offer wins because you can close faster and cleaner than the buyer who is still waiting on underwriting. That is leverage, real leverage, the kind that wins houses. So back to Sam Cotter, the chief economist of Freddie Mac, is telling you the rate environment is the friendliest it has been in 3 springs, and you have a choice. You can keep watching. You can keep waiting for some perfect headline that may never come, or you can get your strategy in order, get fully underwritten, and be the buyer who actually closes when the right house shows up. I can't promise you what rates will do next month. Nobody can. What I can do is sit down with you, look at your full picture, and build a plan that fits your life, not just your loan application. If you're even thinking about buying this spring, here's your next step. Go to rsrlinks.com/certified buyer. rsrlinks.com/certified buyer. We'll walk you through the process, get your file reviewed up front, and put you in a position to win when the right home comes up. No pressure, no guesswork, just a real plan built around your real life. I am Ron Siegel, your certified liability advisor, helping families build wealth through strategic debt management. Thanks for listening to Mortgage 101, brought to you by rsrlinks.com/keysteps. That's rsrlinks.com/keysteps. You are listening to Ron Siegel Radio, discussing your real estate, current events, and the financial markets. When we come back, stay or sell. How to make the right call as you age. Most condo owners are underinsured. Here's the math that proves it. All that and more. Reach me anytime. Off-air number 800-306-1990. 800-306-1990 or ronsiegelradio.com, facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, Ron Siegel 1 on YouTube, Ron Siegel, the numeral 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio. Your home and mortgage connection.
Confused about the home buying process? Or curious how much you really know about buying a home? Take the First Home IQ quiz to test your understanding of buying a home. Created by the nonprofit First Home IQ, this 5-minute quiz will give you a score, what you missed, and why. Take the quiz in 5 minutes at rsrlinks.com/FHIQ and find out what you need to know about buying your first home. That's rsrlinks.com/FHIQ.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio. Or anytime at 800-306-1990, 800-306-1990. Real-time real estate segment today being brought to you by rsrmoney.com, rsrmoney.com. Stay or sell. How to make the right call as you age. At some point, As you start thinking about the years ahead, this question tends to come up. Could I stay here long term, or would it make more sense to move? It's not always urgent. It often shows up in small moments like going up and down the stairs, keeping up with the maintenance, or just thinking about what the next chapter of your life might look like in this home. And for most people, the answer is simple. They want to stay. USC Leonard Davis School of Gerontology found about 90% of adults over 65 prefer to stay in their homes as they get older. If you are watching us on RonSiegelRadio.tv, any of our socials, or the ABC News and Talk AM 1490, FM 98.1 video feed, you are looking at a chart. 90% of adults over 65 want to stay in their current homes as they grow older. But even if staying feels like the right answer, it's still worth thinking ahead about what might actually look like. That's where the right agent can really help. Aging in place is definitely possible, but it's better if you have a plan, and here's why. The home that once worked perfectly may need to change with you over the years, and it's easier if you can anticipate those expenses. Sometimes that means small updates like adding grab bars in the shower. Other times you'll have to make bigger decisions like reworking layouts or moving key spaces to the first floor. Some of those changes are going to be simple. Others can be meaningful investment, and that's why thinking about it early matters. Not because you need to decide anything right now, but because it gives you time. Time to understand what your home may need, time to explore your options, time to find the right contractors, time to space out the expense of the upgrades. According to Elder Life Financial, here's a rough baseline of what it could cost depending on what needs to be done. And again, we got a chart for this one, what it might cost to stay in your home as you age. Don't worry. If your heart is really set on staying, but the costs feel like a concern, it helps to know you have options. Depending on your situation, there may be financial assistance programs available, along with tools like home warranties to help manage unexpected costs. Just remember, if you're thinking about making updates, it's always worth having a quick conversation before you start. A real estate agent can help you understand which changes tend to make sense for your situation and how they may impact your home's value based on your local market. But staying isn't always the best fit for every situation. According to Pegasus Senior Living, quote, while most seniors hope to age in place, practical considerations sometimes make selling a home the wiser choice, unquote. Sometimes it comes down to a simple shift when the home that once made life easier starts to make it harder. That might look like maintenance or yard work that's starting to feel overwhelming, stairs or layouts that are getting harder to manage day to day, or needing more support or care, or being too far from loved ones. And sometimes it's not about necessity at all. It's about lifestyle. Some homeowners just don't want to live through major renovations. Others are ready to simplify, downsize, right size, and move somewhere that better fits this next chapter, whether it's a smaller home, a 55 plus community, or a place closer to family. For them, moving simply means making daily life easier. Bottom line, there's no one-size-fits-all answer here. Some people stay and make updates. Others move to simplify things. Either can be the right choice. The goal isn't to pick one today. It's to understand your options early, so when the time comes, you feel confident instead of rushed. And if you ever want a sounding board to think through what the future could look like for you, give me a call, 800-306-1990, 800-306-1990, or RonSiegelRadio.com. Facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, I'm sorry. Where are we going here, Josh? I think I'm a little messed up, aren't I? That's the real-time real estate segment brought to you by rsrmoney.com. rsrmoney.com. Little editing for Josh. What the heck? Borrow Smart segment today being brought to you by gethomeselect.com. Gethomeselect.com. If you own a condo, you're about to buy one. Here's a question worth asking before you sign anything. Do you actually know what your insurance covers and what your association's policy does not? Because most condo owners I talk to think they're fully covered. Most of them are wrong. I am Ron Siegel, certified liability advisor, helping families build wealth through strategic debt management. Today, I want to walk through something that sounds boring on the surface, but can quietly cost a condo owner thousands of dollars: condo insurance. A condo is not a single-family home, and the insurance is not the same. When you own a single-family house, the lot, the roof, the walls, The driveway, all of it is yours. You insure it, you fix it, you decide what gets done. Simple. A condo is different. You own your unit, you share ownership of the building, the hallways, the roof, the lobby, the parking structure, and the pool. That shared ownership is the part that trips people up. Here's how it actually works. The condo association buys what is called a master policy. The policy covers the common areas, hallways, exterior walls, the roof, the elevator, the lobby. It is the policy that protects the shared parts of the building. And the question every condo owner needs to ask is this: where does that master policy stop and where does my responsibility begin? So what does this mean for you? There are 3 basic flavors of master policy out there. The first one only covers the primary buildings and the common areas, nothing inside your unit. The second covers your unit and the things built into it, but not your personal belongings. The third covers the building, the unit, and the fixtures inside it. 3 different versions, and each one leaves you with a different size hole to fill. Let me give you a quick story. I had a client a couple years back, lovely couple, retired, bought a beautiful condo on the 3rd floor. They asked the association for a copy of the master policy and never read it. Then a pipe burst on the floor above them. Water came down through their ceiling, ruined the floor, soaked the cabinets, destroyed a bunch of furniture. They called their insurance expecting a check. What they got was a lesson. The master policy on their building covered the structure, not the cabinets, not the wood floors that they had installed, not the furniture. And here's the part that really hurt. The master policy had a deductible, and the association charged a portion of that deductible back to every unit owner affected. So not only did they have to pay to fix everything inside their own walls, they got hit with a piece of the master policy deductible too. That is the third thing every condo owner needs to know. The master policy deductible. The association does not just absorb it. It is usually charged pro rata, which is a fancy way of saying every owner pays a share. And that share can be a real number. It can be a few $100s. It can be a few $1,000s. It depends on the building and the claim. Most owners I talk to have never asked what that pro rata exposure looks like. And that is a financial commitment hiding in plain sight. So what should a smart condo owner actually do? First, get a copy of the master policy. Read it. If you don't understand it, ask your insurance agent to walk through it with you. You need to know what is covered, what is not, and what the deductible looks like. Second, fill the gaps. That is where your individual condo policy comes in. Cash value or replacement coverage on your belongings. Personal liability if someone slips in your unit. And depending on where the building sits, flood insurance is worth a serious look, especially in California right now, where so many of our properties are near hills, near canyons, or in zones that have been redrawn over the last few years. Third, this is the part most people skip. Coordinate your insurance decisions with the rest of your financial picture. Insurance is risk management, and risk management is part of the same conversation as your mortgage strategy, your liquidity, and your long-term plan. Here's the bigger point, and the one I want every listener to hold on to. Strategy beats rate always. The interest rate on your condo loan matters. Of course it does. But the rate is one number. The total picture is dozens of decisions stacked together. Your insurance coverage, your association dues, your special assessment exposure, your liquidity position, your blended household interest rate, your protection against the things that go wrong. A great rate on a bad strategy still leaves you exposed. That's the difference between eligibility and suitability. The bank says you're eligible for the loan. The certified liability advisor asks the loan, the property, the insurance picture, and the rest of your financial life actually fit together in a way that makes sense for the next 20 or 30 years. Eligibility is what the bank cares about. Suitability is what we care about. If you're buying a condo or you already own one and you have not looked at this picture in a while, this is a conversation worth having, not a sales pitch. A conversation. We can pull up the master policy, look at the gaps, look at where your mortgage strategy fits, and figure out what your real exposure looks like. If you're getting ready to buy, head to rsrlinks.com/HBG, rsrlinks.com/HBG. That's our home buyer's guide. It walks you through every piece of the condo and home buying picture so you do not get blindsided by something like this. And if you want to start with the bigger picture, your budget, your liquidity, your next steps, go to rsrlinks.com/keysteps. That's rsrlinks.com/keysteps. Either link gets you to the same place, a real conversation about your strategy. I am Ron Siegel, your certified liability advisor, helping families build wealth through strategic debt management. That is the Borrow Smart segment brought to you by GetHomeSelect.com, GetHomeSelect.com. You're listening to Ron Siegel Radio, discussing your real estate, current events, and the financial markets. When we come back, is late May the best time to list your house? We'll talk about it and more. Reach me anytime. Off-air number, 800-306-1990, 800-306-1990, or RonSiegelRadio.com, Facebook.com/Ron Siegel Radio. And if you missed any part of our broadcast, Ron Siegel 1 on YouTube, Ron Siegel numeral 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio. Your home and mortgage connection.
Do you know a homeowner experiencing divorce? Do you know a real estate reference and the divorce decree could cost tens of thousands of dollars? A certified divorce mortgage planning and real estate report could save you thousands of dollars, and it's free from your local certified divorce lending professional. Reach out to Ron today. RonIsMyLender.com. Again, RonIsMyLender.com. Licensed under NMLS 217037, Equal Housing Lender.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions, as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. Real-time real estate segment today being brought to you by rsrmoney.com, rsrmoney.com. Is late May the best time to list your house? You may have heard April 12 to 18 was the best week to list your house. That's based on a report from Realtor.com, but now that it's passed, you may be wondering if you missed your moment. Here's the good news. You did not, because the reality is there isn't just one perfect week to sell your house this spring. There's a window, and right now, you're still in it. Here's why. Different organizations run studies like this every year, and they don't always land on the exact same week. That's okay. It's because they're using different research methods and even different definitions of what best means. But the fact that the results vary points to a larger trend. While there may be sweet spots, the entire spring season gives sellers an opportunity to get some of the best conditions and best sales prices of the year. And you know, if you want to get the best sales price, you got to go to rsrlinks.com/salesmax, rsrlinks.com/salesmax. And it's definitely not too late to jump in. Why listing in late May is the perfect play, according to Zillow. The best time to list your house this year is the last 2 weeks of May, and that's approaching fast. Based on their analysis, this is the ideal time to do it if you want to make top dollar, because in this 2-week window, homes sell for more, sometimes quite a bit more. Depending on where you are and the price point of your area, some homeowners may even net tens of thousands of dollars extra in this sweet spot. As Zillow explains, why late spring? Buyer demand typically peaks before Memorial Day. Families want to move during the summer and settle in before the new school year. More buyers shopping at once can spark competition and lift prices. And they're not only the ones saying listing in May could be the key to selling for more. Adam Data analyzed almost 52 million home sales over the past 10 years and found sellers in May are achieving some of the highest returns. That means the ideal window this year is very much still open. So what does this mean for you? If your goal is to sell for the strongest possible price, this is where timing and strategy come together. And if you want to be sure you're ready to make the most of it, of course, rsrlinks.com/salesmax, rsrlinks.com/salesmax. So what should you be doing right now? When prepping for a fast-moving window like this, you don't want to waste time or money on the wrong prep work. And your agent is your go-to to make sure you're focusing on the right things. They'll be able to tell you if the best week is slightly different in your market and what quick repairs or updates can help you get a higher price without taking a ton of time on or effort. Here's a quick example of things an agent may recommend based on information from Redfin. And again, if you're watching us on RonSiegelRadio.tv, any of our socials, or the ABC News and Talk AM 1490 FM 98.1 video feed, you are seeing a chart of the things you may want to tackle before you sell. Fix what stands out. Boost curb appeal. Brighten and refresh. Declutter your house. At the end of the day, when your prep time's short, doing the right things matters more than doing more things. Zillow says the best time to list your house is just around the corner. Are you ready to make the most of it? If you want to take advantage of this spring sweet spot and get top dollar for your house, let's talk about what you need to do now to get ready to hit the market. That is the real-time real estate segment brought to you by rsrlinks.com, rsrmoney.com, rsrmoney.com. And I am Ron Siegel, your certified liability advisor. You are listening. Well, I guess that's all we got for today, don't we, Josh? Josh is looking at me like, where the heck are you going with this one, man? And you know something, sometimes you just got to roll with it. As always, we ask, set that first radio preset button to come back here and join Ron Siegel Radio, where we only speak about items affecting your house and your bank account. Thanks to all of our sponsors. A big thanks to Josh and Sean for engineering us today. And of course, a special thanks to you for spending a little bit of your day with us. That's all for Ron Siegel Radio. Again, if you have any questions or to meet any of our guests, call me anytime, 800-306-1990, 800-306-1990, or RonSiegelRadio.com. And remember, make a lot of money so you can help a lot of people and have a lot of fun. Have a great day. We'll talk to you next time on Ron Siegel Radio.